Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the Morning Forecast Show, special edition, getting ready for the FOMC meeting today. Thank you for tuning in. Let's get straight into it. I hope everyone's got their newsletter today. 50% off for FOMC Day. That will be ending when the event ends tonight. So grab it while you can, 50% off, and you're going to get the full report later today, an hour before the rate cut decision, an hour and a half before Jerome Powell speaks. You're going to have it all in your inbox. So the best day to get it is today. It is 50% off. The link is in the live chat. It's pinned in the live chat. So do go and check it out. But let's go into the morning forecast newsletter, which is a bit trimmed today because we are getting ready for that special edition to come out, not only before but also after the report comes out from Jerome Powell. So today is a very important day. It is FOMC day. We've got Fed cuts very likely. We've got volume falling off before the Fed comes out. We've got the yen carry trade risk. We've got bond yields hitting highs, and we've got the Fed ending the liquidity drain. Quantitative tightening ends. Are we going to get the start of QE? Well, that's all in today's newsletter, but later on today, you're going to get the full cheat sheet. What I'm watching, what is he going to say, what comes out at this time, what comes out at that time. Remember, there's going to be two separate reports, essentially, two tradable events. One is going to be at 6 p.m. UK, at 7 p.m. UK time, 2 p.m. Eastern time, when the initial rate cut decision comes out. We all are expecting a rate cut of 0.25%, or the market is. If it's a pause, then it's just going to crash. But if it is a 0.25, then we start looking at the other data that gets released then. It's not just at that time the rate cut comes out and then we wait another half an hour. There's going to be multiple bits of information that comes out that time, and I'm going to be looking at each of those bits of information. I'm going to be sending you out a newsletter an hour before to tell you what to look for: the SEP, the dot plot, the report itself. Half an hour later, we have Jerome Powell, and that's a whole host of different things you need to look for. So that's all going to be delivered to you 6 p.m. UK time, 1 p.m. Eastern time. If you've signed up to the newsletter, if you're a premium member, you're going to get all of that today. But yeah, let's go into some of the actual numbers for today. Remember, we dropped 12% in August of 2024 when we had that carry trade unwind in one day on the Nikkei. The Fed was cutting rates. The Bank of Japan was raising rates. Same situation happening this month. So we need to keep an eye out for that. Someone said 0.35% cut. No, there won't be a 0.35% cut. That's pretty much impossible. So let me give you the link in the live chat. If you're watching live, if you're watching later, it's the first link in the description. Even if you sign up after, you can always go into the archive. That's a great thing about the newsletter. You can go back and see all our previous newsletters. So the link is in the live chat right now for that 50% off deal. Remember, we didn't do a Black Friday deal. We do FOMC deals. And today, I think this is the biggest one we've done. Remember, we don't do that many deals on the newsletter. So grab it while you can. And remember, there's so many new things added to newsletter. Let's go into our first story. All the 5 things you need to know today are about the Fed and the FOMC. So the first story today is the Fed rate decision and why a cut is now likely. Let's bring everyone up to speed. We're expecting a 0.25% rate cut. There's an 86% chance of a 0.25% rate cut. We have rarely ever got it wrong. And thanks to the Fed Watch tool, which is the CME group, the Fed doesn't want to go against the market. The market dictates what the Fed does. Don't get it twisted. The Fed doesn't dictate what the market does. The market dictates what the Fed does. The bond market dictates what the Fed does. And if we're looking at an 86% probability of a rate cut, the Fed probably doesn't want to crash the market, so they might have to go for it. So I'm very confident we'll get 0.25% rate cut. And if we don't, then always be prepared for plan B, which is buy if we crash and we get those liquidations. So very good chance, 0.25% rate cut. No rate hike, no 0.5% cut, small chance of a pause, but we're confident on a 0.25% rate cut. So why is that now likely? Because if you go back to our last FOMC, which I covered live on the show about, late October, Jerome Powell came out and said something that scared the markets. He came out and said a specific quote. He said, do not take a September rate cut as a foregone conclusion. Essentially telling us essentially saying we're not going to cut rates in September, or don't assume we're cutting rates in September, which is he doesn't normally use language like that. And when he interprets it, it's essentially him saying we're not going to cut rates in September. But over time, since then to now, the rates have really gone from maybe 40% to 90%. And why is that? Why are we expecting a rate cut? It's important to understand. Well, the narrative on today's Fed decision has flipped aggressively. While Chair Powell warned in October that a December cut wasn't a foregone conclusion, the data forced a U-turn. Following the New York Fed President John Williams' signal that rates remain restrictive, market odds for 0.25% cut surged from roughly 40% to 88%. So we have this Fed president. He came out. He's normally very in tune with Jerome Powell. He doesn't like to go against Jerome Powell, or they don't like to go against each other. And he came out and said the rates are already too restrictive. And when he said that, the markets took that as we're getting a rate cut. And rightly so, because you wouldn't expect him to go against, against Jerome Powell. So the urgency comes from the labor market. This is where it stems from. So remember, dual mandate. You see Jerome Powell on this tightrope. He has to control inflation. He has to control unemployment. Those are two things that are affected by interest rates. So what we've got going on is Jerome Powell trying to control inflation, but also trying to not get unemployment too high to go into a recession or bad for the economy. Unemployment was heading up. Inflation is a little bit sticky, but we can quite confidently say it's trending down, and tariffs is the only thing that sort of kept it up. And again, we expect that to fade out by next year. So the urgency is coming from the labor market, the unemployment data that we're getting. Unemployment hit 4.4%. That's a 4-year high. And employers have announced over 1.1 million job cuts in 2025. The Fed is effectively pivoting from fighting inflation to preventing deeper labor cracks. They are now saying, and the reason we're expecting another rate cut is labor market is a bit more of a concern. And not too big of a concern, because if we look further into 2026, we might only get another one rate cut until the next Fed chair comes in. We might not get any more rate cuts. That's where the divide is. Everyone can confidently agree that we need at least another rate cut to come to our neutral rate. Other people might say we need another 1%, another 0.5%, another 2%. If it was up to Trump, we get 0%. Let's continue with this story. So let me go over here. Yeah, the reversal matters because the Fed is terrified of falling behind the curve. We are likely seeing a cut, pause, assess strategy forming. And that's likely what's going to happen. We're going to have a cut, we're going to pause, and they're probably going to think about it for a while until the next rate cut. So while inflation is stable near 2.1%, the jobs market is flashing warnings. For the first time since 2021, the ratio of job openings to unemployment workers fell about 1 point, or 1.0, meaning that there's fewer jobs now than seekers. A cut to the 3.5 to 3.75 range acts as insurance. If we don't ease now, they rise. They risk breaking the employment half. They risk breaking the employment half of their mandate while maintaining policy that is too tight for a cooling economy. So what else do we need to watch? This is all going to be in that whole cheat sheet, you can call it, which you're going to get an hour before any data comes out. The dot plot. We need to have a look at the dot plot. That it only gets released once a quarter, so we get it 4 times a year from the Fed, and today we're getting it. So we need to look at the dot plot projections for 2026. Let's stop focusing on today and start looking to 2026. There's going to be very important things to focus on, to take away from today, but we also need to keep that long-term view. 2026, what's going to happen? Well, the dot plots that come out from the Fed are going to be very important, and that's what we want to look for. Where do they see interest rates being next year? Where is that median dot? Where can we expect interest rates to come down to? That will show us how many rate cuts we can expect tomorrow. If officials signal a long pause to assess tariff impacts, equity markets pricing in aggressive future easing will suffer sharp repricing. And that's what we need to be careful about. What is the market pricing in? Is the market pricing in lots of rate cuts next year? Because if they are, they might be a bit ahead of themselves, because that's most likely not what's going to happen until maybe Hassett comes into play in May. And Hassett is that new Fed chair that we are expecting Trump appoints. Okay, let's move on to our next story. Volume plunging. All the 5 stories today are about the Fed. That's how important today's FOMC meeting is. Remember, we're going to have dual coverage of today's meeting. We're going to have me live. We're going to have Martyn live. You guys can flip between both of them. You can choose which one you want to watch. I'll be more focused on charts. Martyn will be more focused on fundamentals. We'll both have the broadcast playing, so that will be happening today at I think we're going live at 6:30 p.m. UK time, and if we translate that into Eastern time, that will be, let me get this right. I'm going live at 6:30 p.m. Eastern time. Martyn will go live at 1:30 p.m. Eastern time for the sorry, we're both going to I'm explaining that badly. 6:30 p.m. UK time, me and Martyn are both going to be live on the same channel at the same time. That is 1:30 p.m. Eastern time. Me and Martyn are both going to be live, separate streams, same channel, this channel. So make sure you are tuning in for the actual FOMC. But let's continue to get prepared. So volume plunges as market holds breath for Fed. Yesterday's S&P 500 close was about 14% below the 30-day average, and I'll explain to you why and what that means for today. If you are in the chat, there is a live poll running. Do make sure you answer it. Who's in the chat? We've got Kazanska, we've got Liz, we've got Yolanda, we've got KC. Hello everyone in the chat. Let me know you're here. Paul D is here. Andrew Phillips is here. David Hensley is here. Walker Wonders Why is here. Rhino Skin is here. Dale is here. Carol is here. Who else do we have in the chat? MDL is here as well. Let me know if you're here. Let me know in the chat. Say hello. So, let's talk about volume plunging. That's Jerome Powell with his rate decision. What's it going to be? Well, what we think is 0.25. The S&P 500 went noticeably quiet yesterday, with trading volume dropping 14% below its 30-day average. That's quite significant, but it's quite normal. So don't mistake this for apathy. It's textbook behavioral pattern where institutional money hits the pause button right before the Federal Reserve releases its policy decision. Historical data on the S&P 500 ETF confirms that trading activity consistently falls by roughly 20 to 25% in the 24 hours leading up to the scheduled announcement. What does that mean? If the volume's dropping, well, the reason it's dropping is the market is effectively holding its breath until rates and guidance are public, as traders refuse to place big bets on information vacuum. It makes sense. Why would you want to invest in the market when you don't have enough idea a day before you're going to get some really important data and information? Essentially, they're waiting and seeing. So this wait and see approach matters because it thins out the order book. When liquidity providers and large discretionary traders step aside, it leaves the market fragile. And we need to be careful of this, especially as traders, investors, day traders, whoever you are. You want to understand that because volume is low, the market is fragile at the moment. Once the Fed speaks, that pent-up trading demand releases all at once into a shallower market. So you see more exaggerated moves. Remember, we can't be as fast as the trading the hedge funds and the systems they have in place, because as soon as something gets released on the Fed website, they have bots within milliseconds, and they spend millions of dollars developing this data, fighting with each other to scan those documents as soon as they're released from the Fed, to then see what words they're going to have trigger words, and they automatically trade the market, and then they automatically start putting trades in that will cause liquidations. And because there's not much volume in the market, we will see those rather exaggerated moves. So even sometimes you see a big move to the wrong direction, and then once the normal people have digested the information, it actually goes the other way. The bots sometimes get it wrong, but because they all act together, they bring the market down anyway. And because volume is low, it's easier for them to move the market. So yeah, there's a lot of manipulation going on, and a lot of trading bots at these hedge funds that they develop with for millions, if not billions of dollars at play. So always be careful. We're not smarter than those people, but we can still win. It leaves the market fragile. So once the Fed speaks and once data is released, that pent-up trading demand releases all at once into a shallower market. This creates specific risk environment where volatility doesn't just rise, but spikes aggressively around the announcement window. The quiet tape yesterday is not a sign of stability. It suggests the market is coiled up and ready to snap into motion as soon as uncertainty clears. So what we need to watch for the first 30 minutes post-announcement closely. Thin liquidity often exaggerates the initial knee-jerk move, so be skeptical of the immediate reaction until volume normalizes. Don't get caught out. FOMCs, they cause you to panic sell, they cause you to FOMO in. There's going to be big moves, and I just don't want you to be caught out. Have a plan, stick to your plan. Remember that initial move might not be the actual move, and remember that initial move happens quickly, and you can't beat them. So sometimes when you enter your trade, you're actually already too late. And here's our next story. The sequel, the Black Monday setup returns. We're talking about Japan and FOMC. Who else do we have in the chat? Who else do we have in the chat? Say hello, hello, hello. Yeah, we've got people in. Let me go over to the live chat, and then we'll come back to Bank of Japan. Let me go over here. I love it. Human being Liz is going to translate the email. Rallo is here. Michael is here. Mr. Craig is here. Mike is here. Mike is here. Lovely to see you, Mike. If you are here, I ask you to do one thing. Hit that like button and subscribe. It takes 1 second and it's free. And talking about great deals, we've got, if you can see literally above my head over there, the newsletter is 50% off today. And you're getting 2 special reports. You're going to get the report 1 hour before the Fed information comes out, 1.5 hours before Jerome Powell goes live with his FOMC. You're going to get the full cheat sheet for today's FOMC, and then after you're going to get the full report. Plus, with the newsletter, you get the daily newsletter, you get the training course, you get the one-on-one DMs, you get the budget planner, the debt planner, you get the deep dives, you get Vaz's weekend editions, the portfolio app coming soon. You get all of that. Plus, mainly today, you're going to get those 2 special reports. It's 50% off today. We didn't run a Black Friday sale. We prefer FOMC sales than Black Friday. Who else is here? Mike, Rallo is here. Mike is here. Slim Jim is here. Who else is? KC is here as well. Joshua is here. Mr. Craig is here. Human Being is here. Graham says test. It's working. Crypto Jew XRP says let's go. Welcome into the show. Rebel is here. Mahir is here. Mahir Ahmed, what a great member. Very supportive member of the show. Hello, Sensei. Hello, everyone. Welcome into the show. I'm here working cart chat. No worries. The Patrick Black, at least you're watching. Bitty is here. Bishop. Oh, we've got a Bishop here. Bishop David Black. Lovely to have you here. Hey, Sensei. Welcome to the show. MW is here. Dan is here. Fruke is here. Stu is here. Hello from Scotland. Bad storm yesterday. Storm Bram. Oh, God. I hope everything is okay. Rob Brennan is here. Hey, Sensei. Have you ever seen the history? Have you ever seen Industry on HBO? I think you'd really like it. I haven't, but I'll write it down. Is it to do with the markets? I've been watching so many movies recently with my wife that I guess she enjoys it as well. I'm not sure. About 2008. I've been watching all the movies. HBO. I don't think I've got HBO, but I'll find it somewhere else. What was it called? Industry. Industry. We'll have a watch. We'll have a look. Josh Monroe says, good morning all. That just jumped. Where were we? Retro is here. Hello from Siberia. Lovely to have you here. Sugar is here. Hello from Netherlands. Rob Brennan is here. How come Legal in General has such a high dividend, nearly 9%? Because they make a lot of money. They're not really because of the amount of profit they make. They're not really growing massively. Even though I think their stock has been doing well, they just dish out that money, and that keeps investors happy. Human being Liz says, Sensei, yes, I can't fully understand when you guys talk so fast in English, but I don't mind. Oh, well, you're here with us. Even if you understand a bit, it's great. It's lovely to have you here, though, human being Liz. You can always actually slow down if you watch it later. You can put on like 0.75 speed, 0.5 speed. You can have the captions in your language, and of course, you can translate the newsletter. But it's always great having you here, and thank you for being here. Even though English isn't your first language. We've got Comic here. We've got Sick Boy Customs here. We've got Fitty here. Hi, big fan. Interested in your plan to take the 5k investment, same as Martyn has done with the SP 500. Any info on this plan will be appreciated. Thanks, Andrew. Lovely to have you here. I love the username. His name's Andrew, but his username is Fitty. Brilliant. Yeah, I'm trying. Look, it's not gonna. We're not like other YouTubers. So I'm not here to try and sell you a alerts and say buy here, sell here, we'll get rich together, because that's ridiculous. That's assuming we have the same risk tolerance. It's assuming you want to take on the same risk. It's assuming many things, and it's pretty immoral. So I'm not doing that. However, in the newsletter, I'm going to be giving you the understanding behind why I look to buy things. So I'm going to have the portfolio analysis. So again, 50% off today. What I'm going to be doing is, this is why I'm buying this company. This is the research I'm doing into this company. This is why I haven't bought this company. This is the hours I put in research here. I might as well share with you. So that's going to be in the newsletter. I'm going to be showing you live on the show as well, here and there. So yeah, it's going to be interesting. It's going to be fun. Might lose out, might enter a recession, we'll go down, but we'll build it up just like Martyn did. So it'll be interesting, it'll be fun. I hope you follow the journey. Miguel says, UPS in the house, be nice to delivery people. I'm always very nice to my delivery people. I sometimes give the delivery people a tip, because I think they work very, very hard. C. Marty says, maybe that's normal in the US, but I don't think many people give tips to their delivery drivers in the UK. C. Marty, afternoon sensei, especially around Christmas and stuff like that. It's always great. Rob Brennan says, yep, it's about a UK trading floor. Oh, brilliant. That'll be very fun to watch. Thanks for the suggestion. Neko, we're going to come back to the report for FOMC. I'm just reading all of this. Why do you have a black grounded under your eyes? You don't sleep enough. No, I've got some sort of eczema that always crops up here and there. It sometimes looks like I've been punched in the eye, but it's somewhat a lack of sleep, but also the eczema. Yeah, I was up in London yesterday preparing the FOMC report for you guys, doing the research, speaking to other people. I was there until 1:30. I got home maybe at 2:30. So yeah, and then obviously up this morning doing the newsletter, but it's worth it. It's FOMC day. Ninja Cowboy says, howdy guys. It's on BBC iPlayer, I think, also. Oh, there we go. That will be easier to watch. Daddy Pascal says, hi Sensei, how are you? Have a good one. Thank you very much, Daddy Pascal. Better Wellness Company is here. Hey all listening in, Sensei. Keeping busy. Rob Brennan is here. Is dividend investing less profitable long term than growth investing? Is dividend investing less profitable? Is dividend investing? I'm trying to see if I can just give you a yes or no answer. Is dividend? There's many factors to it. But if I'm trying to keep this simple, I would say, yes, it's less profitable. Dividend investing, normally growth companies, even though they don't pay you a dividend or maybe a very small dividend, because of the amount they grow and then that compounds, it's normally much more than the yield. So imagine a company with high dividend of 7%, or even like Legal and General of 9%. That company probably might go sideways, might go slightly down, might grow a couple percent a year. So you're effectively your rate is about 9%. But if you're in high yield, or if you're in growth stocks, you're expecting maybe 15, 20, 25 percent gains a year on year. But again, all of it can be part of a balanced portfolio. You don't need to go dividend or growth. You can have a bit of everything. Human being Liz says, yes, sometimes I do the slow version. Oh, I love it. Human being Liz. Casey, well, your English must be getting better the more you watch. Got to go. Have a great morning, Casey. Thank you very much. Sick Boy Customs, what are we thinking today? Rate cut or not? Very, very confident we'll get 0.25% rate cut, but that's priced in. If we don't, get ready for a bloodbath. Sick Boy Custom says, I'm back in Sao Paulo for Xmas with my Brazilian family. Lovely. I think we pulled up a picture of Sao Paulo before. It looks lovely. RB is here. Smash it. Smash the like button. Yes, please take 1 second to hit that like button. Make sure you are subscribed and make sure you check out that link, which is pinned. It's a 50% off deal today only. 50% off deal. If you get it now, you get the whole report as well, which is coming out in a few hours' time. So get it while you can. Let me see if I can give you that link again. There you go. My bad luck yesterday. Sold EVT EVTOL. I guess you mean vertical EVTL before it popped up 5% more. Just saying. Well, you must have made money. So if you made money, that's always great. It's all the drugs and partying, not eczema. Nope, don't do either of them really. I've never been someone who wanted to go to parties really. I'm just anyway, let me continue. What with a bit of profit, human being Liz. William Myers says, "Good morning, everyone. Partying." I wish. Human being Liz says, "I'm sounding more British." Rob Brennan says, in the past, Ben Graham days. The goal of investing. The goal of investing was to be repaid dividends, and non-dividend paying companies were seen as speculative stocks. Now, no or low dividend seems to be the norm. Yeah. I don't. Dividend companies are great, especially the ones that continue to go, like something like J&J, Coca-Cola, because you've got both elements. You've got dividends, you've got growth. It's perfect. It's actually less speculative. But yeah. What percent? Did you talk about silver? Not talked about silver yet, but again, how long have we been saying this? $25, $30, $35. Bullish. Am I still bullish? I'm bullish on silver. Mr. Craig says, what percentage could we get for sold today, if any? I haven't looked at the chart. If you want to become a member, we can have a look at it. Sick Boy Custom says, you pronounce Sao Paulo. So Paulo. Oh God, don't get me started with pronunciations. I'm awful. Human English says, what about the show today? And what about the show today? You didn't went say to Essex. Why would I be in Essex? What's going on? What about the show today? Yeah, the show, the main FOMC show is at about 6 p.m. UK time. Oh, so that's when the report comes out. 6:30 p.m. UK time, 1:30. Need to check. I think it's 1:30 p.m. Eastern time. That's when me and Martyn both doing a stream on this channel. I sold 20% of my EVTL at 7:20. I mean, that's congratulations to you, Wadey. What time is the announcement? The announcement is in about 5-6 hours. Tilray, we're getting prepared for it. Let me go back to the newsletter now. Great, Wadey. I sold and bought back after 6 hours. So silly. Jerry Mandarin says $60 silver now. Yeah, that's amazing. Ron Brennan says, I'm very close to becoming a Bitcoin maxi. Oh, don't become a Bitcoin maxi. A Bitcoin maxi just means you hate every other technology. You only like Bitcoin. All other coins are awful. I think 99% of altcoins are terrible, but if you're in the camp that there's nothing but Bitcoin and Bitcoin rules the crypto world and there's nothing else, it's a dangerous camp to be in. Maybe Sick Boy Custom says, nice try, you're a legend. What's going on? Bruce Graham says, what I don't know who that is. Ellie B is here. Hey Sensei, been a time since I heard you. Can you please talk about silver some more? Making money on it thanks to you. Now thinking of laddering out, what levels would you sell? For me, silver is very long term. We'll have a quick look at the chart. If I remember correctly, maybe my first. Let me just go over here, type in silver. We'll have a very quick look at it. Remember, it's not financial advice. Congratulations, you've made money, but it's not because of me. It's because you did your research. You pressed the buy button. It wasn't me. Let me go over here to the chart. Okay, well, yeah, first target was $60. Next target is $69. Target after that is $72. But yeah, will I sell at 75? Well, if there's a stock market crash and I want to get invested, then brilliant. Silver and gold have been going up and they're probably not going to crash massively. So I'd maybe sell silver and gold at $70 or 75 if there's an opportunity in the market. If not, I'll just be holding until $100. That's just my thoughts because it can go higher. If it goes back down to 50, I'll buy more. Um, but yeah, maybe I'll start selling at 75 and then $100. Okay, let's go back to the Bank of Japan. Let me just answer the last few questions. How do I get my hands on how do I get my hands on a $2,000? Well, we're running a $2,000 giveaway.
Believe this.
Oh, we've got a new member. I can't believe it.
3369 has become a member.
Look at that. I cannot believe it. Stevio 3369 has become a member. Welcome to Bronze. Top tip, check out the Electrum membership because you get the bronze perks, the silver perks, and then all the additional VIP perks of Electrum and the special events we do for Electrum members. But thank you for becoming a member in time for the FOMC. What I also suggest, go check out the newsletter. 50% off. We've never had a 50% off deal. We didn't have a Black Friday deal. We don't run deals on the newsletter that so go and check it out. 50% off today only. You're going to get the full FOMC cheat sheet an hour and a half before Jerome Powell speaks. You're going to get the full FOMC what's it called? After the event happens, we're going to analyze it all, give you the final bit of data. You're going to get all of that today. Plus, you get the daily newsletter, you get the chart analysis, you get everything as part of the newsletter. So go and check it out. 50% off today only. Let me give you the link in the live chat. Let's go back to the report that we're running right now. Market rising, volume, and then we've seen a rally on. Sorry, we've got a question here. Yeah, so if you want the $2,000, it's Martyn Lucas. Let me see if I've got the links. Giveaway link. Here we go. Go and check out that website and you can win $2,000 worth of XRP. Free to enter, free for all. Nice to meet you. My question is that on the 12th of November, since the 12th of November until the 21st, on the S&P 500, market fell with rising volume, and then we've seen a rally on lowering volume, suggesting bearish tendency, right? Good question. I haven't. We don't actually have time to look at it right now. Let's see if I can quickly have a look at it for you. From the 21st, from the 12th of November to the 21st, 12th of November to the 21st. Let me see if I can get the volume on the chart. SPY. I'm just trying to have a quick look for you from the 12th of November. It's not been. We had a spike and now, yeah, we're down. It's normal. It's normal because we're coming into FOMC. Everyone did their trades based off last FOMC. Then they're starting to wait ever since maybe the 28th of November. So the last couple of weeks, the volume's been down slightly. But yeah, it's more because people are waiting for today. Is it bearish? Maybe there's a bearish edge to that data, but I wouldn't put too much weight on it. I want to lock in some profit. We'll buy back if it dips around FOMC. Human Being says, no, the EVT Everton meeting is today. Vaz invited us all to go, said you'd both go. Yeah, he said I might go. I can't go. So so Vaz will be there. We're gonna get some amazing footage from Vaz. Very, very excited to hear back from Vaz. It's gonna be great. His official media going to the EVTL event today. I won't be there. Wadey says, I want to lock in some profits. Okay. I see I will buy more if it falls down. Rob Brennan says, oh, I didn't realize that's what it meant. I just meant I'll throw a lot of money into Bitcoin, some ETH, XRP, but mainly Bitcoin. Yeah, you're not a Bitcoin maxi then. Leon says, good morning, Sensei. Thank you for tuning in. Jerry is here. And there we go. Okay, let's go in to back into getting ready for FOMC today. If anyone does grab the newsletter, let me know in Margin Call, it's best movie. Yes. I think I was that the one I watched yesterday. We need to start suggesting movies to each other. Margin Call. I definitely watched Margin Call. I'm trying to remember which one it was. Margin Call. Which one was this? I've watched so many, I'm getting them all confused. Oh yeah, that one was. Yeah, it was good. The only issue was it's just at the end the climax was just we didn't see the 2008 crash. We didn't see it happen. But it was a great movie. Yeah, I liked it. It's probably not like an amazing movie, but because I love this sort of stuff, I really enjoyed the movie. Yeah, if you haven't watched Margin Call, go and check it out. It's a good movie about 2008. So, volume plunges as market holds breath for Fed. We talked about this. Volume's down, makes the move quicker. Be careful on that initial move. Lots of bots trading it, and it can move very fast because volume's down, liquidity is low, and the moves can be faster. We talked about why it's likely now. Jerome Powell last time says, don't think a September rate cut is a foregone conclusion. We're very confident we're going to get 0.25% cut today. Then our next story is the sequel. The Black Monday setup returns. Let's talk Bank of Japan. We're not going to talk any nonsense about reverse carry trade sending XRP to $1,000, but we're going to talk about what's likely. So, 2024, August 2024, is it happening again? Well, remember August the 5th, 2024. The Nikkei plummeted 12% in a single day. That was the worst drop since 1987, while the VIX, remember it's the fear gauge you can call it, spiked to 65. It wasn't just panic, it was a mechanical failure of the yen carry trade. For years, investors borrowed dirt cheap yen to buy high-flying US tech stocks, but when Japan hiked rates while US economy wobbled, the trade blew up, forcing a massive forced liquidations of global assets to pay back yen loans. And that's the issue at hand. What's the issue at hand now? Well, Japan is looking to raise rates on the 19th of December. The Fed is looking to cut rates. What happened last time around August the 5th? The Fed was looking to cut rates. The Bank of Japan raised rates. So we're in a similar sort of situation. Things are different. We're staring down the barrel of the exact same setup today. However, the Fed is set to cut rates while the Bank of Japan is signaling a hike. We're very confident that the Fed will cut rates today by 0.25%. We're very confident that Bank of Japan will raise rates by 0.25%. This policy divergence shrinks the profit margin for holding US assets funded by yen. What's the key difference? Well, the key difference in 2024, the hike was a surprise. We were surprised by the Bank of Japan raising rates. Today, it's largely priced in. However, the mechanics of leverage don't care about expectations. If the yen strengthens too fast, algorithms could trigger automatic sell-off in the US risk asset just like they did in the prequel. So the market is betting that knowing about the risk makes it safe. That's a dangerous complacency. Watch the 155 JPY level. Japanese yen level. If the yen strengthens past this, the priced in narrative will crumble fast. So very, very dangerous situation we're in. We've done deep dives on this. We can talk about it for days. Just understand that there's an issue. Japan, cheap money for years and years and years and years. You can buy it, and then you can just go and buy a bond in the US, and you're making 4% and borrowing money at negative. You might be being paid to borrow money, or at least getting money at 0%. That was the norm for years. Over the last couple of years, Japan's economy, there's an issue. The yen is weakening. They're raising their rates. They're in a recession, but they still need to raise their rates because their currency is the bigger issue. And because they're raising rates, their 10-year bond yield is going up. People are going, actually, it's not worth the risk anymore. The difference between the rates we get in the US and in Japan are not worth it anymore. algorithms underlying. Remember, it's not just people just choosing to sell, it's algorithms underlying go, actually, the risk is too much now, there's no point. They sell, they cause cascading liquidations, and we get a leverage wipeout. That's what happened in August of 2024. Then we didn't really expect the Japan carry trade to unwind because we didn't expect a rate hike. This time we do. But just because we know a rate hike is coming, don't just become complacent. Don't just go, well, it's priced in, because the mechanics of it, the underlying way it works, isn't really priced in, because that just happens. That is just bots doing it. That's just underlying assets. That's just the mechanics underlying it will just react to that data as it comes, and it might cause the same situation. So understand that that's a risk. Understand that we can have a sudden drop. Understand that that is going to happen on the 19th of December. So we're going to be watching it closely. So always be aware of all of this, and this is why the newsletter is great. You start understanding things you weren't aware of before. You might have just seen headlines on X or fake news on X. This really helps you to start understanding all these concepts and how to be prepared for it. This is, again, taken from our very own newsletter. Another story about the FOMC. Guys, check out the news. Let me see if I can bring up this. I forgot to put it up on the screen, so let me see if I can quickly do this. So if I go, if I airdrop this to myself, bear with me for one moment. I want to put this on the screen. Let me share. Airdrop. Okay, let me see if I can put this up on the screen. How do I do this? Oh, there it is. That's come straight on the screen. Let me make that smaller. Okay, so let me show you this. This is what you get in the newsletter today. Today is a very important day. FOMC day. You want to be prepared, but you want to be prepared every day. Today, you're going to actually get a special report. So if I go over to what I wrote in the newsletter today for the premium members, members notice critical FOMC reports. Let me just remove that from the screen for just a second. Please keep a close eye on your inbox today for your exclusive in-depth analysis surrounding critical Fed Reserve decision. We're sending out 2 essential reports to guide your trading strategies. The pre-decision report, an hour and a half before Jerome Powell speaks, an hour before the rate cut decision. You're going to get a comprehensive pre-decision report, a cheat sheet, your comprehensive overview detailing our key levels, our scenarios to watch, and the new... Oh, Martyn's calling in. Sorry, Martyn's calling in. So you'll be delivered that 6 p.m. GMT, 1 p.m. Eastern time. So go and check out. I'm gonna tell you more in a second. We've got Martyn calling in, so I would love to bring you on the screen in a second. So there you go. The link is in the live chat. Go and check it out right now. You get 50% off today. Let me see if I can go over to this screen over here. I was having a couple issues earlier, so hopefully it works. Martyn, welcome to the show.
Good morning, Sensei. Great show this morning. Great information. Newsletter, absolutely fantastic. Not a surprise, really, that you're rubbing shoulders now with a company of Michael Burry as attending these big events for the newsletter, which you are. I'm sure at some point you're going to win yourself some kind of award for your newsletters. So congratulations, everyone who's got that this morning. Why am I suited and booted in my special get up today with the special magic tie and the gold suit? Well, because it's a golden day of opportunity. The reason why I'm calling into Sensei's show, I'll be live in just 5 minutes time. It's D-Day, and we are preparing for an explosive, volatile day, D-Day. I'll be live for a couple of hours after Sensei finishes here in a few moments' time. You'll be glad to know I'm up again today. I'll tell you all about it. But the reason for calling in is this. Today is our special FOMC Black Friday, if you like, event. As Sensei is telling you, you can get the newsletter today 50% off the annual plan, 50% off our best ever deal, and you will have a special event today following the FOMC report all the way through, all the dot plots, everything you need as it happens. Incredible. You've got the newsletter this morning, plus you've got this special one coming out before as the event begins. It's amazing. You really need that. Now, why are we doing 2 streams at the same time? Are we competing against ourselves? No, we're providing you the best service. Some people have messaged me, why on earth, when it's the FOMC report, it's your biggest show of the year, why don't you just do it on your own? I could do it on my own. Last time I did it, I had 26,000 people watch me live. This time, I'm sharing it with Sensei. Why am I doing that? Because it's about giving you the best service. Yeah, it's probably best for me, personally, do it all myself, because you'll all watch my show and I'll have 26,000 people watch me and I'll feel great. However, we know you all, oh, hello, let me just clear that. I've got alerts coming in. Let me just turn my alerts off. There we go. We have got audiences that like different things. Some people like to look at the fundamentals with me and the way I present things. Some people might prefer the chart and the way Sensei presents it. So what we're going to do is we're going to go live at the same time on the same channel. So you will see at the top of the channel, 2 streams running side by side. So you can pop in and out. Many of our Lucasades will have both screens showing because Sensei will be broadcasting one broadcast of Jerome Powell. I'll be broadcasting another. Both the same broadcast, but different angles, different perspectives. Some of you will prefer to choose. But what we're doing to celebrate, to give you all a chance to try out both streams, to find the ones that you like, is we are doing magic numbers today to give away $2,000. Remember, it's only a couple of weeks away before we give away live on our show $2,000. So what we're going to do is magic numbers. One at the middle. Sorry, I'll say that again. One at the beginning in the first couple of minutes on my show. All right. And then I'm going to send you to Sensei. So Sensei is going to have a number in the middle of his show, and I'm going to have a number at the end of my show. Now, you won't miss it, because each of us will tell you when the number's coming up. So you're not going to miss it. You don't have to sit on my show and wait for 2 hours thinking, when's the magic number going to come up? And then you sit on Sensei's show for 2 hours. When's the magic number going to come up? We're both starting at the same time. And in the first couple of moments, I will give you the magic number. So you've all got it. So if you then want to go and see Sensei, you don't have to sit with me for 2 hours waiting for the next magic number. All right. We're going to be fair. We're having a bit of fun. Me and Sensei are trying to see, what you like and what you don't like, what you prefer. And we think giving you a taste of everything gives you the best service. That way you can choose where you want to watch. Many will watch on 2 screens. If you want to open up 2 tabs, you can have 2 devices open and watch on different tabs, different devices. That way you get both the perspectives. And of course, if you have one muted and the other one playing live, you can see what's going on and you can interact with both. Many of the Lucasades will do that. The choice is yours, however. We want to give you the best service. And alongside that, in both of our streams, we'll be giving you the link for the 50% newsletter. Strongly recommend everyone get that today. Because you'll have everything you need for the FOMC report. Of course, you can go the normal route, the free trial, or if you know you like it, you've already tried it out, today is the best day to go. Do you know what? I'm going to get the whole thing. 50% off. That's it from me. I'll hand you back. Sensei, if you've got anything you'd like to add to that.
No, it's going to be an exciting day. I look forward to it. Hopefully we all make some money together.
Absolutely. And not let's forget, we've got Vaz on the ground at the same time as the biggest event of the year. We've got Vaz live with Vertical Aerospace. It's all going on at once. It'll all be brought to you. Stay here on the channel, whether you're with me, Sensei. You won't miss anything. You'll get the magic numbers on either. You will get the special promotion on either. The choice is now yours. I hope you trade wisely. I've been buying the S&P this morning on the dip. I sold my SGov. I set a limit order and got the best price I could. So I'm all out with SGov, ready to buy, deploy cash into stocks. Sensei, good luck to you. I'll be live in a couple of minutes. Please finish off your show as you wish to do so. Take another couple of minutes if you want to. Then send everybody to me for the build-up D-Day. And then we both go live exactly at the same time. I'll give you a magic number in the first couple of minutes, so you don't have to wait. If you do want to go and see Sensei, you can, and then you can flip between the two. The choice is yours, and you won't miss anything. Enjoy the day. It's going to be fast. It's going to be intense. It's going to be crazy. You've got to keep up. If you snooze, you lose. That's it from me. Have a great day, and Sensei, good luck to you.
Brilliant. Thank you very much. Good luck to you too, Martyn. Brilliant. There it is. There's Martyn. What a day. I love it. Martyn's all dressed up for the occasion as he should be. I'm going to put on my suit and jacket. I feel like I'm being left out. Don't worry. I'll be all dressed up for the main event. Let's quickly just run through a couple more of these stories and then we'll send you over to Martyn in 5 minutes time. So at 35 we'll go over to Martyn. What was I showing you? Oh yeah, I was showing you the newsletter. Let me just finish that and then where's that gone? I apologize. Let me just bring that back up on the screen. I'll see if I can put it over here. So today is going to be one of those important days. It's the FOMC day. We are oh, why has that come up on my face? We are expecting, there it is. We are expecting a 0.25% rate cut. That's pretty much confirmed. If we don't get a 0.25% rate cut, the markets will crash. We're not going to get a 0.5% rate cut, but there's all of these issues that we're going through right now in the newsletter. I just want to tell you about the newsletter very, very quickly. You can see what the newsletter gives you. Market news headlines, top stock movers, ad-free experience. You get all my insights. You get the chart of the day every day. You get the event cheat sheets. Today, we're going to give you an event cheat sheet, and you can get it for 50% off. Don't really do these deals. We didn't do a Black Friday one, so you can call this a Black Friday deal. The deep dive research, hours and hours we put into this. Specialist emerging tech, we've got experts writing. We've got Vaz writing about eVTOLs. We've got other people behind the scenes writing about specific topics coming up soon as well. We've got XRP weekly newsletter. No one else does an XRP weekly newsletter. We're going to bring it to you. You've got one-on-one DM access to me. You can message me 24/7. You've got the debt planner and the budget planner coming soon. You've got the full access to the portfolio insights out coming up in 2026. So even if we have a price increase, your price won't increase. We've got a chart analysis trading course as well. So go and check out the newsletter. The link is in the live chat right now. Let me just run you through the top stories again. Martyn's I'm sure he's gonna run through some of these stories. The newsletter this morning was a little bit cut down because we're gonna give you that big story later on today. That big report. So members noticed. If you're a member, critical FOMC reports. Keep a close eye on your inbox for exclusive in-depth analysis surrounding the critical Fed Reserve decision. We're sending out 2 essential reports to guide your trading strategy. You get the pre-decision report, your comprehensive overview, detailing our key levels and scenarios to watch as the news unfolds. It will be delivered at 6 p.m. GMT, 1 p.m. Eastern time. That's an hour and a half before Jerome Powell speaks. It's an hour before the rate decision. The post-meeting digest, you're going to get one after as well. We're going to digest it all. Once the markets settle, you'll receive a sharp breakdown of official statements and events, highlighting the immediate trading implications for the next days. So thank you for your continued support, members. If you're going to join, thank you for joining as well. You get the one big thing. All of this is in here. Let me run you through the key stories. We're going to go straight over to Martyn. The Fed rate decision, why a cut is now likely. Remember, Jerome Powell said it's not a foregone conclusion. However, the labour market has come down. The Fed President John Williams also came out and indicated there will be a rate cut. So the market has now priced in a very strong chance of a 0.25% rate cut. Volume plunged yesterday on the S&P 500. That really means that what we're going to see today is explosive moves to the upside or the downside. Be careful of that first initial moves. It could be done by bots and then it can move in another direction. They're very fast. Control your FOMO, control your panic selling, and have a predefined strategy. The sequel, Black Monday, is it returning? We're talking about the reverse. No, not reverse. We're talking about the carry trade. August 5th, 2024, the Fed was cutting rates. The Bank of Japan hiked rates. We would drop 12% on the Nikkei in one day. People defaulted on loans. People sold their bonds to pay, sold their US equities to pay back the loans. We're looking at the same sort of strategy right now, or the same situation unfolding. The Fed is cutting rates. The Bank of Japan is raising rates. We're 90% confident of both of them. 90% confident the Fed will cut rates today. 90% confident the Bank of Japan will raise rates on the 19th. It doesn't mean we'll suddenly drop at 13% again. It could just be prolonged until the next one, but don't get complacent and just say it's priced in, because it's not really about pricing and it's more about the mechanics, the underlying mechanics. We've got the global bonds hitting 16-year highs and why that's an issue. The Fed putting the plug on the drain. We've got quantitative tightening, quantitative easing. If you want to read these stories, it's in the newsletter. Martyn might cover on the next one, but the exclusive report for members only will be coming out later, and we're not going to be showing all of it on the show. So if you want to be looking at the event, knowing exactly what time things are going to happen, the 5 top charts I'm looking at: Bitcoin, S&P 500, Ethereum, Solana, bonds. I'm going to have all the chart analysis. I'm going to have step-by-step plays from what time the event is starting to the next when Jerome Powell speaks, the press conference. All of that is going to be nicely put together in a newsletter. You'll get that later if you sign up. But what we're going to do now is go over to Martyn. So thank you everyone for tuning into this show. Tune into Martyn now, and then tune into us with the FOMC later. Go and grab that. Go and grab that newsletter deal while you can. Going over to Martyn now. Thank you everyone for tuning in. Until next time, take care of yourselves and each other. Bye-bye.